Welcome back to Investing Talk podcast. We are getting into one of the really hot names in enterprise automation and AI today, UiPath. The stock's seen some incredible momentum,
Yeah.
driven by big announcements, a fantastic earnings report. But the real question for you listening is pretty straightforward. With all this volatility and the huge recent run-up, is UiPath actually a good buy now? Or, has the easy money already been made? We've got the breakdown, Q2 fiscal 2026 financials, analyst notes, the charts, everything. Our goal here is to pull out all the key info to help you figure that out. And hey, as always, if you find this analysis useful, please hit subscribe, like the video, drop a comment. Seriously, if there's a company you want us to look into next, let us know in the comments.
That's exactly the plan. We're connecting those headlines, the news, back to the actual operational numbers. We have some really strong fundamental data from those Q2 filings. Excellent performance, really. But that's success. It's been amplified by this intense market momentum, fueled by the whole AI narrative picking up speed. Plus, there are quite a few potential high volatility events coming up over the next few months. So yeah, we need to synthesize all of this so you get a complete contextualized view of UiPath's investment case right now.
Okay, yeah, let's unpack that momentum first, because the last few months, they've really been defined by this big pivot towards AI, haven't they? They're not just an automation platform anymore. It feels like they're positioning themselves as a core enterprise AI solution.
Yeah, absolutely. That recent surge is, well, undeniable.
Yeah.
And it stems from that aggressive push into AI innovation. Specifically, it's about making AI actionable for big global companies. That's the strategic angle here.
Right, and this gets really interesting with those two major September 2025 announcements. First, that huge partnership with Snowflake. They're combining UiPath's agentic automation with Snowflake Cortex AI, is that right?
That's it. And it's a significant technological step. Maybe we should clarify agentic automation for everyone listening.
Good idea.
Okay, so think of traditional automation as just a script. It follows fixed steps, right?
Yeah.
Agentic automation, though, it involves these intelligent software agents that can actually reason, learn, and dynamically adjust what they're doing based on real-time info or unexpected stuff. So by embedding this into Snowflake's cloud data platform using Cortex AI, well, UiPath is really validating its direction in deep enterprise AI. It's a big proof point.
And that collaboration definitely validates their relevance. Which leads straight to the second highlight. You mentioned UiPath getting recognized as a 2025 AI 25 awards winner. That's not just some vanity plaque, is it? It feels like real confirmation of leadership in the sector, especially when the market's scrambling to find the long-term AI winners beyond, the usual chip suspects.
Exactly. That kind of external validation matters a lot. And the market, it reacted almost instantly. Path shares saw a pretty significant surge back in September, really boosted investor confidence. But like you said, this didn't just pop up in September. The groundwork was being laid earlier.
Right. We saw that operational foundation being built over the summer.
Yeah, if you look back to August, the company really accelerated its AI transformation efforts. They released an expanded platform integrating agents, automation, orchestration, all the good stuff. This framework basically helps big companies streamline AI adoption, move past just testing things out,
Yeah.
and get into real-world applications.
Yeah.
It immediately put them kind of at the forefront of this real-time orchestration technology. And even before that, back in July, we saw the stock starting to climb sharply. There was increased bullish chatter from analysts, more institutions paying attention. Momentum traders were already kind of sniffing around, anticipating this shift in automation trends towards deeper AI integration. And UiPath looked like a clear winner from that.
Okay, so the narrative is definitely set. AI, partnerships, awards, the headlines look great. The headlines can be cheap, right? Did the actual operational results, the numbers, justify all this excitement and the massive run-up in the stock? Let's shift gears now and really dig into those Q2 FY 2026 numbers. What do they tell us?
Well, the financials absolutely provide that strong foundation for all the enthusiasm, no question.
Yeah.
UiPath reported Q2 FY 2026 revenue of $361.73 million. That's a 14.6% increase year over year. And their annual recurring revenue, ARR, that also grew by a healthy 11% year over year.
Okay, 15% revenue growth. That's solid, especially with the macro environment being a bit tighter. But compared to some of the crazy SaaS growth rates we saw a few years back, it does feel like a bit of a deceleration, doesn't it? Given this huge AI tailwind they're supposedly riding, is 14% growth actually good enough?
That's a really critical question. And I think the answer lies in the quality of that revenue, and especially the profitability. They delivered a huge earnings beat. Non-GAAP operating income hit $62 million. Quarterly EPS was $0.15. Now, the consensus estimate was only $0.08. That massive beat suggests, well, two things. First, excellent cost discipline. They're managing expenses well. And second, it suggests they're successfully moving clients to higher value, stickier AI-enabled products, so products that probably come with better margins. So this feels like a quality beat, not just a one-off cost saving.
Right, that focus on efficiency, that's powerful. And usually when management delivers a quality beat like that, they signal confidence, right? By raising guidance for the rest of the year.
Exactly what we saw. Management bumped up their full-year FY 2026 guidance. Now it's between $1.571 billion and $1.576 billion. That's up from their prior guidance of around $1.55 billion. So that confirms they expect this momentum to keep going, not just a one-quarter blip. And for Q3, FY 2026, they also gave bullish guidance. They're expecting revenue between $390 million and $395 million, which is, again, well above what analysts were expecting.
Okay, and this confidence seems backed up by their financial structure too, right? You mentioned strong fundamentals.
Absolutely. They have very low debt levels, ample liquidity, over $1.6 billion in cash and equivalents on the books.
It's a lot of cash.
It is. And what's really impressive for a tech company still in high growth mode is having that cash reserve and being profitable on a non-GAAP basis. Their current ratio is over 3.0. That means they have this financial war chest, basically. They can weather macro storms, fund their AI R&D aggressively. They could even potentially scoop up smaller competitors to defend their market share. That points to some serious resilience.
So they've got the operational efficiency, the financial flexibility, but market leadership in tech, it changes fast. Do they still have that competitive edge to keep justifying, well, what looks like a premium valuation?
I'd say they absolutely do. Their market position is really their anchor here. They are still the confirmed leader in robotic process automation, RPA. That's their core.
No.
And crucially, just this September, Gartner reaffirmed them as a Magic Quadrant leader for intelligent document processing, IDP, ahead of their peers.
Okay, could you quickly define IDP for folks who aren't swimming in RPA jargon daily?
Sure. IDP is basically the AI brain that tackles one of the biggest headaches for enterprise data, unstructured information. Think about messy invoices, handwritten notes, complex legal documents in PDF format, stuff like that. IDP uses AI to take all that messy, unstructured data and turn it into structured, usable inputs that automation systems can actually work with. UiPath really dominates that specific space, and their ongoing innovation in agentic automation helps them keep that edge as the whole market matures.
Got it. Okay, let's pivot now to the charts. How is Wall Street actually processing all these fundamentals and headlines? The technical picture seems pretty strongly bullish right now.
It really is. If you look at the price action around September 30th, 2025, the stock was up nearly 15% just intraday. But what really shows that institutional demand isn't just the daily move, it's the gap up. Shares jumped from around $12.56 straight to $15.18 at the open. That kind of gap, that magnitude of price discovery, that's not just retail buying. This is just some strong institutional conviction coming out of those earnings.
Yeah, that technical setup seems to confirm the bullish trend for the medium term. The stock's trading way above both its 50-day moving average, which is around $11.50, and its 200-day MA, around $11.80.
That's textbook technical confirmation, really. Plus, the stock's been making a series of higher lows and higher highs ever since July. That pattern attracts momentum traders, people who specifically follow setups like that. Right now, we're looking at resistance near the recent highs, around $15.50. If it can break through that level and hold, well, the next psychological and technical target could easily be in the $16 to $18 range.
Okay, and this momentum leads us right into what you mentioned earlier, a calendar packed with potential volatility over the next 3 months. What are the key dates or events we should be watching?
Right. First up, potentially, is October 15th. That could be an ETF rebalancing event, focusing on growth tech. That might cause significant liquidity flows as large passive funds adjust their holdings to reflect UiPath's recent valuation growth. Could move the needle. Then the big one, the most scrutinized event, is November 7th. That's the Q3 FY 2026 earnings release. All eyes will be on their Q3 results, sure, but probably even more on their guidance for Q4 and whether they maintain that operational efficiency we saw in Q2.
And then wrapping up the year.
December 12th. That's when we might expect their year-end financial outlook, maybe some major product updates or announcements heading into the new fiscal year.
Okay.
Yeah, so all these events are potential catalysts. They could either confirm the bullish trajectory or, become excuses for profit-taking. And you also can't ignore the speculative buzz around the stock that helps support this momentum.
Ah, yes, the rumors. Let's touch on those. Maybe unverified, maybe just whispers, but they can definitely move shares when sentiment is this high, right?
Definitely some chatter out there. One persistent rumor revolves around potential M&A interest. I mean, given their leadership in automation and this AI orchestration piece, There's speculation that a larger tech firm might want to acquire UiPath to instantly get their hands on that platform and integrate it.
Makes sense.
There's also some, again, unverified talk about a possible spinoff, maybe monetizing their advanced AI agent and orchestration tech separately to unlock value. And finally, after that Snowflake deal, there's just continued speculation about future collaborations, maybe with other hyperscalers or major ERP vendors, to expand their reach even deeper into large enterprises.
Okay, we definitely built up a powerful bull case here. Strong narrative, strong numbers, strong chart. But for critical thinking, for this analysis to be balanced, we have to look at the risks. So what are the major vulnerabilities that you, the listener, really need to weigh against all this positive momentum?
Well, the primary risk, as is often the case with these high-flying tech names, is simply valuation. These shares are trading at a premium compared to many of their, let's say, more established SaaS peers. And that premium status means the stock is really susceptible to rapid multiple contraction if the overall market sentiment sours, turns risk off, or if interest rate expectations suddenly shift higher.
Right. So if the market suddenly decides it cares more about cheap cash flow today than potential growth tomorrow, UiPath could get hit disproportionately hard.
Precisely. Second big risk is execution risk. It's inherent in being a high-growth company. They're rapidly scaling complex, brand-new AI technology that brings operational challenges, logistical hurdles. They basically have to execute flawlessly on integrating these new agentic capabilities while also maintaining their existing large RPA business. It's a balancing act. Third risk I'd point to is customer concentration. Their revenue is pretty heavily concentrated among large enterprise buyers. Now, these are generally huge, stable contracts, which is good, but it also means that the delay, or worse, the loss of just one massive deal, could create significant unexpected volatility in their quarterly numbers.
Yeah, that makes sense. And finally, there's always the macro picture lurking, isn't there?
Always. Tech equity valuations are just highly sensitive to macroeconomic shocks, Fed policy shifts, you name it. UiPath has historically been quite volatile in response to broader market swings. So if we see, say, unexpected inflation numbers or a sudden change in rate hike bets, the stock will likely feel that pain quickly, regardless of how well they're executing internally.
Okay, so given this balanced view, the, explosive fundamentals and momentum on one side versus the premium valuation and execution risks on the other, what's the official analyst consensus looking like right now?
It's interesting. Despite the incredible momentum, the big earnings beat, the overall analyst consensus is actually still cautious. It's generally rated a hold. Now, this isn't necessarily a rejection of the fundamentals. It's more the market's way of saying, okay, we love the long-term potential here, but wow, the stock has already run up significantly, partly on speculation, and the current valuation just warrants a bit of a pause. The average price target is sitting around $13.41, which is actually below where it's trading after that recent jump, but the high target out there is $18. So that tells you some analysts definitely see significant further upside if the growth story continues to play out perfectly.
Right. So let's try to synthesize all this for you, the listener.
Yeah.
We've really established a clear duality here, haven't we? On one side, you've got strong, high-quality fundamentals, undisputed leadership and automation confirmed by major reports, a really resilient balance sheet, and a technically confirmed bullish chart structure. Strong case. But that's pitted against, well, a premium valuation, no doubt about it, and those inherent operational and concentration risks that come with scaling rapidly in a complex field. The sources we looked at seem to suggest two distinct ways to think about this, depending on your investment horizon. For short-term traders, it looks pretty attractive right now. You're capitalizing on that confirmed momentum, those upcoming Q3 catalysts. But for long-term investors, it seems well-suited if you're seeking structural growth exposure to the whole AI megatrend. You get that thanks to UiPath's innovative platform and financial strength, provided, of course, you can stomach the volatility that comes with that premium price tag.
Exactly. And maybe here's a final provocative thought for you to chew on as you wrap up your own research on this. Think about the broader trend. Digital transformation spending across big enterprise clients. It's forecast to accelerate significantly through 2026. This isn't some small niche trend. This is a massive multi-year economic tailwind, a huge wave of spending. So consider how this broader, almost guaranteed economic commitment might disproportionately benefit UiPath, given they are a confirmed leader in agentic automation. Maybe that recent valuation run-up isn't quite as risky as it seems at first glance. Maybe it's more of a justified repricing based on their long-term potential in that environment. Something to mull over.
Definitely food for thought. Great points. Thank you for joining us for this analysis today. We'll catch you next time.